Okay. Black and Decker, Black and Decker. Big up to you, man. Yeah, man. Makers repeating. Yes, we can. Okay. Boom, boom, boom. Yes, the market is consistently repeat. Oh shit, Yasmin, what the hell, man? You scared the shit out of me. My face is in the camera, like my face is right in the phone. Alright, watch this, yeah. Thanks a lot for that. Okay, so now you can see previously. Okay, you can clearly see the previous structure repeated itself on the current market. Okay. Okay, so now what's happened? If we look at 2016. Versus current market highs of 2023, I want you to kind of see what's happening with the previous, right? So if we look at this low and this current market high, right? What you're going to see now, there's a lot of resemblance in terms of behavior. Now, comment below if you guys could see this. And I'm asking this, I'm only asking people, the people that have been here, they know already. But there's new people that are coming in, okay? So for all the newcomers, that are in here, comment below, right? And let me know if you guys can see this, right? It's very important. Price action is constantly repeating itself over and over again, right? Excuse me. Now, if I line these up, right, just like this, it's the same thing, but in the opposite direction. Does it make sense? So we had these lows and you had these lows, okay? Same thing, but in the opposite direction. You look at the previous structure, 2016, you had that initial push, exhaustion, and we broke out and we formed these new highs, right? We also had a 50% retracement, right? From the most aggressive low, and that was from this low, from back here, okay? So you can see here, we had the same thing, but there was a big difference. We had a push, exhaustion, we formed a higher low, and then we pushed up and we filled out that imbalance. Now I'm going to get cracking with the imbalance because it's important, because it's a behavior that we had previously back in 16, at the lows of 1682, I think it was. Okay. So if we look at the overall structure of the current market, already we know one thing. We could all agree that the previous structures have repeated itself previously and the current market is en route to doing so. Does it make sense? Would everyone agree or disagree that there's more of a high chance that the market is going to do the previous thing on the current market? And I'm going to break it down in such a manner that you're going to see the same thing, okay? You're going to see it now. So now, if we indulge into the supply zone all the way back in 2021, July times, right? If we look at July times, we can look at that support line right here. Okay, and if we look at all-time highs, we can clearly see what happened. So just ignore all of this. Remember I told you about the aggressive swings? That is an aggressive swing right here. That there is an aggressive swing, and that there is an aggressive swing high. Okay, even from this low to that high, you can clearly see that prices kissed off the price levels of the 618 premium levels. Does it make sense? So we had prices bounce up, come back down, and literally tested this area of support. So we built up a strong support line, okay? But if we analyze the weekly, right, it's important. Why? Because when the market moves, it's gonna move. Does it make sense? If we look at the lows of 1682, we know there was a shitload of orders that needed filling anyway, but it took a year, okay? Approximately a year before prices came back down and literally trap sellers here. Does it make sense? Am I making sense, guys? Comment below if this is making a lot more sense. If we look at the all-time highs, we could also see 68, like 2068, right? We could see there was an imbalance here and there was an imbalance. Guess what? It took about approximately a year apart for these imbalances to fill. Can you imagine that? So the behavior is consistently doing the same bloody thing over and over and over again, okay? It's very important to understand this, guys. There was also another imbalance here. Do you understand? From here, boom, it came back down, filled it out, and then literally shot back up again, okay? So it's very important to understand this, guys, okay? Now, if we look at it from this perspective, Okay, we know that we had an imbalance here. A year later, bam, we left a shitload of orders at all-time highs, and then prices got down to these lows. Now, if you remember what I was saying about this behavior and this behavior, the chances are that prices literally trapping sellers here is going to do the same thing at the current market highs. We had telltale signs here. We already had telltale signs here in relation to prices trapping buyers here. Does it make sense? Just from liquidity, okay? And we could see this, guys. We could clearly see it. So if we was to put a volume profile on this, when prices shot up, it literally shot up, trapping sellers, pushed back down, bounced off the 50%. We pushed up for a new high. We had a lovely institutional candle that was bullish, taking out the previous low. If we do this on a daily, we're going to see it more clearer. So you can see what happened here. Look, the market formed these lovely structures to the downside. But remember, we had a weekly imbalance. It didn't fill. But once prices got down to these lows, we shook out a shitload of positions and we had a clean change of character where we had public funds, okay, sentiment, public funds at 80, I would say about 80 or 79% sales. Can you imagine the public funds, the retailers were caught out on this? We had multiple rejections at these lows and then prices continue to push back up, okay? Now listen to this very, very carefully, guys, yeah? It's very important because I'm giving away a shitload of gems for you to understand and for you to become a lot more consistently profitable within the markets. What happened when prices got up here? It formed a high, okay? It formed a lovely high at these highs, right? And then prices plunged. It swept liquidity from here, as you can see, and then caught out the buyers, okay? Because we had a clean structure, we had an impulsive move, and prices formed this new high just here and pushed back down, created a higher low. Does it make sense? Okay? Once we got down to this low, we pushed up, formed a new high, and then we trapped buyers. So a year later, that imbalance was filled out. Now, one of the things that I want to elaborate, when I use the volume indicator, it literally enhances areas of liquidity, right? And one of the common signs or the common things that you generally see, even fundamentally, when news comes out, prices would always push towards areas of liquidity. And I use this analogy a lot. And I talk about to the viewers and I tell them, guys, listen, the institutions are very much like a fisherman, right? And they're very conservative. They're not like retailers. They don't move like retailers. Does it make sense? So they don't move like retailers. They will always consistently be very conservative with the way they do things. They lock in prices. They let the bulls and bears create liquidity within the market and they will sweep the shit out of it. And that's exactly what they do. Do you understand? When you see a fisherman in the ocean, how does an experienced fisherman in the ocean gets one confluence or a couple confluences? One of the main confluences to know that there's going to be fish in the ocean is how? Birds diving into a certain part, right? So you're going to see birds quirking or twerking or whatever, and they're going to be diving into a certain location in the ocean. It gives the fisherman confluence that there is going to be a shitload of fish. So if you know there's going to be a shitload of fish somewhere, what are you going to do? You're not going to pull out a bloody fishing rod, are you? You're going to try to maximize the shit out of it, okay? So what I mean by that is preparing your tools, your risk management, everything, like preparing yourself to get into for a longer push. Do you understand? You're going to pull out your nets and you're going to throw your nets in there and you're going to try and catch as much fish as possible. Does it make sense? Okay? I probably lost the shit out of you guys. You probably lost. Okay? But anyway, do you understand what I'm saying, yeah? Okay? So we can see that prices would always move from an area of liquidity from a low volume to the highest volume. Okay, now, boom. You guys understood that? Okay? We're going to go down to a 4-hourly time frame and we're going to break down the market structure from a 4-hourly. We already know that prices are moving into an area of liquidity. Okay? We've seen it before and we're seeing it now. Okay? The behavior is very, very, what's that word? It's consistently behaving in the same format all the time, right? All the time, the market's consistently doing that. If you look very carefully at this high, right? If you look carefully at those highs, if I go back on the shots, right? And I want to show you something very important. If we go back if we go back